Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is another special edition of Market Masters for you to be able to really understand what is really happening in the markets and the mutual funds industry and what exactly is the outlook from here on. We have somebody very special joining right in on the show to discuss and to decode the current trend as well as the outlook going forward. Mr. A Balasubramanian joins in. He's the MD and the CEO of Aditya Birla Sun Life AMC. Warm welcome to you, Mr. Bala, and thank you so much for taking the time out. It's always a pleasure to host you, and this time more so because in the last 5 months we've only seen the mood getting more somber in the markets, and you probably are the best voice who can really help our viewers understand whether it is a time to be panicked or whether things will get better from here on. So let me start by asking you, on a scale of 1 to 10, how worried are you about the market fall that we've already seen, sir?
Okay, it's difficult to put a number, Sakshi, on this. Definitely this time, while the fall was sometimes around the corner, when Indian equity market were touching all-time high and the valuation are getting stretched across the board, not backed by the strong fundamentals. And while the other side, FIs were continuous sellers in the market, and looking at their opportunities in the rest of the world, and therefore they are pulling their money in India, either go back to the own market or invest in China as a market. Whereas from Indian point of view, I think domestic savings have been largely coming into the capital market. So therefore there was some kind of stretch in the valuation. There is absolutely no doubt. So even all of us used to say that valuation is getting stretched, but of course we never give a sell call, given the fact that we all believe in staying invested in the market for long term. Therefore, you may have to go through the pain period for some time in case there is a valuation issue comes in. I think especially last 2 weeks, I think post-Trump election, there has been a significant tariff-related discussion that is happening globally.
Yeah.
And some bit of uncertainty around that, whether it is inflation, whether it is the policymakers, whether they cut interest rates immediately, and so on and so forth. And that actually further added to the fuel in the fire, and therefore the last 2 weeks fall was largely on account of that. And while the fall has been quite severe and damage, especially the individuals who have been investing in the market directly, the mutual funds have done relatively better during this period because the diversified exposure we have between large cap, mid cap, and small cap, and various sectors allocation that is there. Therefore, the mutual fund portfolio has done better than the individual portfolios, which otherwise was the case, a little opposite of that, maybe about 6 months before. Individuals were doing better than the mutual fund managers because some of the stocks were doing extremely well. But to the extent, I would say, from mutual fund investors' point of view, is not so much of pain. There is a reduction of value, no doubt. But I think from a larger point of view, I think the pain period which was there when slowdown in terms of growth, when there is election which was around the country, there was a slowdown in terms of government spending, there was a slowdown in terms of growth momentum. Reserve Bank of India has been cutting down the credit growth quite substantially. They thought there could be a bubble in the credit market, therefore they asked banks to go slow on their lending side. All of them came together in terms of pushing down the market further. But my belief is market always overreacts for such kind of things. My own belief is, especially the last Friday's fall, if you have to take, as I'm taking specifically Friday's fall, is the fall which was actually with the high depth, and second is the high volume. Therefore, I feel that more or less we have come to a level where we should see some stability before bounces off. At the same time, growth coming back. I think this the number which got printed a few days back on GDP number for next quarter, as well as the last quarter, was better than the expectations. Therefore, we may probably see some stabilities coming back. On a 1 to 10 scale, though it's difficult to put the number, definitely the value erection on the portfolios are quite large. To the extent while there could be a different kind of pain points for different set of people. At the same time, given the fact India as a country, a lot of moving parts, the narrative of India doesn't change. I think whatever we had a narrative on India about, say, 9 months back, everything remains the same, whether it is a growth economy, fastest growing economy, tax collections are good, fiscal deficits are getting better, interest rates are very stable, ROE in India is, the capital cost in India is the lowest, and the currency is very stable except the few weeks currency that we have seen it some bit of depreciation. But if you look at the fundamental basis, I think India is well poised. But in the current volatile scenario, post the US change of guard, government change of guard that has hit the world, we'll have to live with that period of uncertainty for some time. for 1 or 2 weeks more before take a firm call.
Fair point. Sir, have you seen any unusual mutual fund redemptions, investors stopping SIPs, contraction in SIP accounts? Is that a concern? We did see the recent Jan numbers that came in that showed us just a marginal drop in the SIP flow as well as the accounts as well. About 5 lakhs or so kind of a contraction was seen. How are you assessing it with your own company and overall, and do you expect further contraction from here on too?
I think generally the trend that I have always witnessed, whenever the market volatility increases, and whenever as a result of that, the experience of investors in terms of real return that comes in, whether 1 year or 2 year or 3 year, 5 year return, when they look at it, when it comes substantially lower than what they would have experienced at the time of starting the SIP, generally there is a tendency to stop the SIPs during the period and then come back. This is a cycle in which we go through, and so especially this happens with the first-time investors who have not experienced the market volatility. Whereas the seasoned investors who have been investing in SIP for the last so many number of years, they have seen multiple cycles. On the contrary, they actually reinforce their confidence in investing in SIP. I think we have two set of people. So therefore, the people who have experienced the market, they don't care, and probably they see an opportunity to invest. Those who came in the last few years or maybe last few months, they would have probably got jittery, not experienced in terms of volatility. To the extent we see some kind of volatility, especially online platforms where people just come and buy for the sake of buying without any kind of purpose for which they are making investments. Such kind of people, there's a tendency to pull out. Therefore, we also seen some reductions. In fact, I must also quote the number where after the COVID, the number of demat accounts in the country had shot up quite substantially. There was a period when the market crash happened, there was a period where we saw a reduction in the closure of demat account. Again, we saw demat account going up once again a subsequent period. I think I saw in the last 3-4 years where we saw 14 crores population having a demat account, came down to 12, then came back now 18. I think we'll probably see a similar trend as far as the mutual fund concerns. But at the end of the day, I think what is also most important for mutual funders to note, I think the power of SIP, a lot of people have understood, and they have also decided that the way of investing in mutual funds should always be SIP, which is a good fundamental change that has happened for the mutual fund industry, where people have learned to weather around the market volatility by investing in SIP, whether it is the large cap, flexi cap, small cap, mid cap. Even as a fund house, we are seeing in that area quite stable kind of scenario, which is what my own belief is. I think over a period of time, investors got matured, distributors got matured. The people like us also have been advocating continuous investment is more key to success, irrespective of the market volatility we see. That's something as a trend I continue to see.
Okay, but after these 5 months of consecutive fall that we've seen in the market, sir, do you think now is the right time for people looking to invest in the equity markets through mutual funds, equity mutual funds? Is it the right time? Would you say that?
I think while of course the way I see is instead of saying is the right time, the best time to always invest in the market is when there is a fear. And the best time to exit the market when there's a greed. Of course, we don't do either side perfectly. Most of us don't do it perfectly because we always have some kind of apprehension in terms of after I sell, if it goes up, what happens? After I buy, if it goes down, what happens? This is the way dilemma always happens. But my belief is where the market has corrected to 22,000 index, which is Nifty, and valuations, which used to be one of the big concern. Now today is trading about 19 times the P multiple. Yeah. I think India's growth rate will be back to about 6.25 to about 6.75 kind of range. And with a good amount of tax collection that we are seeing it, and the government push, especially in the capex, will probably gain more momentum as we move to the next financial year, backed by the private sector capex coming in. I think corporate earnings, which has gone through two quarters of pain period, we'll probably see one more quarter of pain period as far as the corporate earnings concerns. But market always start looking at beyond the 1 year forward. I think if as I get into 25, I will start looking at 26, 27. I think if market has to start looking at 27 earnings and 26 earnings, then definitely the number will be looking far better than what you will see on the 25, 26. So in that extent, I would say market, though it may go down a little bit because current volatility may continue for some time, but from investors' point of view, one should not try to time the market and probably should start building the portfolios as they always done in the past. During the period of volatility.
Fair point. I want to understand from Aditya Birla Sun Life's perspective as well as the AMC. Sir, what is the current position of cash across equity assets for you? And if you could share whether this has been rising of late, or is there a reduction in your cash levels so far in the new year also, if you can tell us, sir?
Yeah. Generally, we don't take a cash call in equity because we always believe money is given to the equity portfolio manager to find a right opportunity at all point of time and stay invested. The only thing that they do is they may move from value to a growth or growth to value, or maybe they will do some kind of sector rotation, taking into account the market valuations and the growth momentum that could come from each of the sectors and companies. That's why they do it. The average cash flow that we normally keep are anywhere between 3 to 4%, and is not more than that. In fact, the last few months during the volatile period, it would remain more or less somewhere in the same range. But except we would have done some kind of sectoral rotation. For example, we as a fund house increase the exposure to the banking as a sectors.
Okay.
And within the banking sectors, we increase the exposure to private sector banking sectors, given the fact the last 5 years they've gone through a consolidation period and so on and so forth. I'm just giving an example just as a
Sure.
just to give an anecdote, with no recommendation specific on that anecdote. That's the way the portfolio manager operate, and that we have done across different parts of the sectors in the market. And basically, the portfolios are getting reconstructed at each point of time, taking into account the future benefits of those investments that can accrue to the portfolio.
So if I have to ask you, right now you're saying that, we are probably very near to markets getting stabilized. Once that happens, where do you think, which fund categories do you expect to perform well in the year 2025 and thereafter?
Yeah, I think clearly the way I think the market has been behaving, the large cap category is one which as a fund house have been advocating for quite some time. Which at the same time flexi cap as a category, and frontline equity, which is our Birla Sun Life mutual frontline equity, Birla Sun Life flexi cap fund. These are some of the things which keep saying. Given the fact that invest in actually large, big companies who can sustain the business for the next many years to come. At the same time, business model keep changing to adapt to the change in the macro environment globally and continue to drive the larger vision of growth. At the same time, given the volatility that we have seen, there is one fund which I think can potentially remain the focus area for investors is Balanced Advantage Fund and the Multi-Asset Allocation Fund, which invest across all different categories with a very clear discipline of how much money can invest maximum in equity. So in Balanced Advantage Fund, we keep about 60 to 70%, and right now the exposure would be about 48%. That's why I think you can probably say we take asset allocation call where we go underweight on equity. We go overweight on equity depending upon where the market will move. Therefore, Balanced Advantage Fund is something which we have been recommending. And second is the multi-asset allocation fund, which invests across asset classes, which includes gold, silver, REIT, InvIT, fixed income securities, which will act as a cushion in your portfolio.
Okay.
At the same time, you take 60% exposure to equity. Also, it's an asset class. Basically, the hybrid asset class, which I think is got a combination of equity and fixed income, might be a good asset class to take. One of the investors should keep in mind, sometimes we actually get worried by the interest rate differential between each of the segment and then start thinking, am I taking the right call or not? But if somebody comes into the Balanced Advantage Fund or somebody comes into the Multi-Asset Allocation Fund, they should not compare the return with other actively managed diversified equity funds, either in the large cap category, flexi cap category, or in the small and mid cap category, because the return differential can always be a period of bull market period, the return differential could be large. But if you take over a period of time, after going through all the ups and downs, the hybrid funds generally provides one of the best experience for the investors without getting too much worried by the market fluctuations. And last but not least, we also suggesting that if somebody has got money for more than 5 years period, I think it's also a good time to look at small and mid cap from a portfolio building point of view. Given the fact they are quite a lot, and Indian economy will march towards a $10 trillion economy then over a period of next 5 to 7 years. As the economy goes towards $10 trillion economy, Indian equity market also should become $10 trillion market cap, which cannot come from only the large cap Nifty 50 companies driving that market cap towards the journey of $10 trillion. There has to be a widespread participation coming from the larger market coming from mid-sized companies as well. That's why I believe that small and mid cap allocation should be considered, keeping in mind that I'm investing for 5 to 7 year period.
Okay, fair point. Sir, do you continue to believe that gold and silver ETFs, which have been garnering more interest from investors, have been seeing higher flows, will continue to do so, looking at the external uncertain environment that persists even now?
Yeah, the asset class will probably remain as a protector of capital. I think gold is something, leave aside even individuals, even institutional investors like sovereign funds
Yes.
have been parking their reserves, forex reserves in gold and other silver as a commodity. I think therefore gold as a commodity will remain permanent. Only thing, taking into account the tax and taking into account the power of company that could come from equity over a period of time, it will always be superior to a gold as an asset class. I think we should not get carried away by 1 year return has been higher than the equity in the case of gold. Therefore, we should not change the narrative. Moving away from earnings-led price movement to the just storage value price movement, with demand supply price movement. In the case of gold, it's more of demand price movement as well as a protection against the world uncertainty that we are seeing. But if you have to look at equity, the power of company generally is higher if the investment is for long term. Therefore, one has to look at gold and silver as some portion of the investment, not the large component of the investment. And large component of the investment should be in the equity related instruments, which includes hybrid funds.
Point. Sir, also just wanted to ask you, of late there is this new 250 rupees per month SIP that's gotten approved from AMFI. A lot of people are excited about it. I mean, SBI launched it, and then, of course, a lot of inquisitiveness was already there. People were already calculating that, okay, if I hold it for about 30 years, I'll get 17 lakhs. For those who have not just started anything, and those who are probably in rural, semi-rural areas as well, I wanted to understand what is your sense on this very small ticket SIP. And also, do you think it will be viable for AMCs to continue such kind of small ticket SIPs, sir?
In fact, actually, we as a fund house were the first one to conceptualize 250 rupees SIP,
Okay.
being part of industry initiatives at one point of time. We could have launched it first, but of course, SBI being the large institutions, they took the lead of launching it first. There is absolutely no issue on that. But we were also the first one to, we are one of the few funds to launch even 100 rupees SIP at one point of time.
Okay.
And while there is no doubt, the cost of maintaining, cost of acquisition of customers for 250 rupees, 100 rupees is relatively higher. But at the same time, over a period of time, I think the 250 rupees SIPs, from investors' point of view, can definitely give an opportunity to participate in the growth story and effectively taking the SIP of mutual funds to the Bharat, every household in Bharat, especially not only the middle class population, even the below middle class population can also put their savings into the mutual fund, given the fact the next 10-15 years will probably moving gradually away from savings economy to the investment economy.
Yeah.
And therefore, if wider participants coming in from every household in the country, and the 250 rupee SIP will become hit. At the same time, we as a fund house launched a different avatar of SIP, which we call it a Sahayog SIP, which is basically each one of us as an individual who are doing very well, but we all engage our own employees to do our household work and drivers and other people. So we as a fund house launched which is called a Sahayog SIP with a minimum of about 500 rupees a ticket, where you also as an individual can contribute on your own benefit of your employee. Because each one of us actually employ at least 2-3 people in our household activities. And that also something as a fund house we launched, and something we are hoping. The 250 rupee SIP launches, the Sahayog SIP, the Aditya running it, all of them will help actually larger participant coming from people which otherwise do not focus on investing for the longer term wealth creation point of view. Therefore, this will bring in inclusive participations as a country. That's something will take this product to every household in the country. That's what we believe. And we as Aditya Mutual Fund, initially we will not worry about too much of the cost that will incur on acquisition our customers. I think we look at the largest benefit that can accrue to the people who are investing in this segment. And as long as that's good for them, and that's good for us as a service provider.
Right. Also, in the end, I wanted to ask you, we have a new SEBI chief now. Have you already had a conversation with him yet? And what is the expectation from the new SEBI chief for the industry at large, sir?
The I think the choice of new SEBI chairman is pretty good, given the fact that sitting in Delhi before he became a finance secretary, he was a DIPAM secretary, primarily responsible for restructuring of public sector companies, as well as he brought the one of the largest IPO in the country, which is LIC, jointly with the LIC management team. Therefore, he has a deep understanding of capital market, and he was also the first person to issue the ETF, Bharat ETF bond. Therefore, he has a great understanding of bond market, he has a great understanding of equity market, and given his rich experience being part of the finance ministry, working closely with the capital market, in fact, I myself had personal interactions while he was the DIPAM secretary on a variety of things. I think his coming into the SEBI would only help in carrying forward all the good work that is being always done by the earlier chairman, including Madhi Buj, whatever the as a chairperson has done extremely good in terms of making the capital market to where we are today. And I'm sure he coming in board will only take it to the next level of growth momentum. And even I must also acknowledge and thank the outgoing chairperson, Ms. Madhi Buj, who did extremely good job in terms of ensuring Indian capital market not only grow and companies are able to raise the capital from the market for their business growth. At the same time, we also don't have any accident in the capital market. With the rising in volume, normally leads to an accident and disrupt the market. In fact, we never saw it happening thanks to the regulatory framework that was set, which were more the safety mechanism that was built under the regulatory framework was so superior. Therefore, we could carry on entire market volatility with a great success. I'm sure that's why I think SEBI as an institution have always been in the forefront, taking care of the investors' interest. Under the new leadership, this will only get more better.
Absolutely, there's a wonderful take there on both the outgoing as well as the new SEBI chief there. We have just one question that's come in on our YouTube from one of our viewers, sir. So I just wanted to address that to you. This is Bhaskar. He says he's 51 years old and he says that he accumulated 24 lakh rupees from his old mutual fund SIPs, but he stopped his SIPs 8 years back. And now he's looking to re-enter into the stock markets with a 4 to 5 year horizon, and he wants to know where should he be investing. Should it be in momentum funds or global funds, or what is the best way? You did highlight some of them where you are already recommending, but if you could suggest, he's 51 years old, next 4 to 5 years, where should he put his money now?
Yeah, I think it's good. Good to know that he has accumulated good amount of wealth to the SIPs.
Yes. Yes.
At the same time, it's also sad to know that in the last 8 years, they stopped this SIP. During the last 8 years, we have seen one of the best period, especially in the last 4 years. Anyway, it doesn't matter. Market, there is no missed opportunities. There's absolutely no lost opportunity. Market always provides an opportunity. And going by that, he should start the SIPs very soon, no doubt. But in terms of 5-year period, SIPs should always come into the schemes which has got larger equity component. Like FlexiCap fund kind of schemes would be more better, given the fact it's got flexibility to the money managers to cut across various segments of the market and find opportunities. I think 5 years is a good period for one to look at these kind of schemes. And given the fact that 51, you must also be a little conservative in the asset allocation approach.
Yes.
Therefore, hybrid fund with a multi-asset allocation fund could also be good fund to look at you are doing SIP.
Okay, well, thank you so much for addressing that, Bhaskar. You've been the lucky viewer who's got the custom-made advice coming in from Mr. Bala right here on the show. It's always a pleasure to listen to your wisdom, sir, when it comes to years and decades of experience of looking at the markets and the industry at large. When you say that things are likely to stabilize sooner, that really will give a lot of calm to our viewers as well. Thank you so much for being with us on this special edition of Business Today Television. Look forward to having you more often, sir.
Thank you. Thank you.
All right, viewers, we'll wrap it up at that. This special conversation on market masters with Mr. A Balasubramanian. Clearly, a lot of themes, sectors, and of course, an outlook on both markets and mutual funds trends have been discussed. I hope this has really given you a lot of clarity as to how to look at the way we are actually, seeing the markets go forward from here, and what are the trends going to be important for you to look at this point in time, where are top experts really advising you to put in your money when it comes to mutual mutual funds as well. Stay tuned with us on Business Today Television. We'll continue to get you such fascinating and interesting conversations around markets and mutual funds. Stay tuned.
डिलिमिटेशन के बाद प्रोरेटा के हिसाब से दक्षिण के एक भी राज्य का